What up, HyperChange? Welcome to another episode. Tesla earnings are out. The shareholder letter is here. Just got off the conference call. We have so much to cover. So I'm going to start by breaking down the financial results, go into the highlights of the shareholder letter, and then do an in-depth breakdown of what went down on the conference call. So let's get right into it. So this is a chart of Tesla's quarterly vehicle deliveries. And the most important thing, my takeaway from this entire quarterly report that just happened is this is what I'm extrapolating Tesla to produce next quarter or deliver next quarter, 82,500 cars. I mean, this is huge news. I think this is the biggest reason the stock is up after hours is because they have guided that they will be producing 50 to 55,000 Model 3s in Q3, and they will be delivering even more than that. That's partially because they had vehicles in transit. They were holding some for the tax credit in Q2. But the point being, that means they're going to deliver, in my estimates, 57,500 Model 3s in Q3. And they also held guidance for Model S and X that those would see deliveries about 100,000 this year, meaning at least 25,000 deliveries per quarter for the next 2 quarters. So 25,000 S and X plus 57,500 Model 3, and I get to 82,500 cars. This is a blowout number or guidance from Tesla here. And just to put it a little more in context, the Model 3 sales, this is the 57,500 number that I'm guesstimating for deliveries, and you can just see the growth almost tripling from the previous quarter, which was more than a double from the previous quarter. So the S curve is here, the ramp is underway, and this, Tesla ramping the Model 3 so rapidly, just simply selling so many more cars, scaling the business, is the reason why they are going to be able to be profitable next quarter and going forward. If we take a look at the quarterly financials, you can see revenue is at an all-time high of $4 billion. Once again, though, the loss was solid around negative 600 million. If we compare this to prior Q2s, you can see that revenue was up about 43% from Q2 last year, but once again, the loss increased about tripled year over year. There's a couple things going on here. The biggest thing being that Tesla's gross margin had taken a huge hit in the past couple quarters as they've ramped Model 3. This is their biggest product launch ever. They're having to put up a bunch upfront for service costs. In terms of gross margin, the gross margins are super low until they ramp Model 3. So that is dragging down the GAAP gross margins of the entire company. But we got a bright spot of news this quarter where gross margins are actually trending back upward overall. They're about 15.4% on a GAAP basis, above my estimate of 15%. So this is a really good sign. Model 3 specifically achieved a positive GAAP gross margin in the quarter and will achieve close to 15% gross margin in Q3, close to 20% gross margin in Q4. These are awesome numbers. Tesla's actually starting to make money on the Model 3, so this trajectory of improving gross margins overall is set to continue dramatically over the next couple quarters. That is why they're going to be able to be profitable. The leverage in Tesla's business model, this is something I've been pointing to. Their operating expenses, I believe, are going to start growing much slower than revenue. This will lead to a lot of those incremental gross profits dropping in the bottom line. As you can see, there was a little bump in the OpEx this quarter, $103 million due to the restructuring plan they announced. So that's a one-time expense. So without that, you can see that Tesla's OpEx growth rate was about 25% in the quarter, normalized. But if you overlay revenue growth, you can see that revenue growth at 43% is significantly outpacing OpEx. If I do a rough back-of-the-napkin math on what I think Tesla's going to be able to do next quarter with 80% revenue growth and actually assume OpEx growth rates accelerate to 30%, even so, you're seeing this divergence between revenue and operating expenses, and this is the leverage in Tesla's business model of why they're going to be profitable next quarter. They've only reaffirmed my confidence in the ability to achieve profitable production. I made a ton of episodes detailing the financials and sales Tesla will need to hit to be profitable in Q3 and Q4. My estimate was for around 44,000 cars delivered in Q2 or in Q3, and now it looks like they could be doing, 57,500. So blowing my personal expectations out of the water. I'm so excited. Other key takeaways from the shareholder letter, they still have $2.2 billion in cash, down from $2.7 billion last quarter, but this is a much smaller burn than I'm expecting. Still means they have a really solid cash cushion. Their CapEx projection is now less than $2.5 billion for the full year. Originally it was $3.5, then it was $3, now it's less than $2.5. The other thing they point out in the shareholder letter is that the Model 3 wasn't just the best-selling mid-size sedan in the country in July. It had 52%, the majority of the entire market. It outsold all other mid-size sedans in the US combined. I mean, this is the iPhone moment of the auto industry here. This chart in Tesla's shareholder letter says it all. The Model 3 is disrupting. It is absolutely dominating in market share, and there are still production issues or bottlenecks. This trend is only going to continue. The gap's only going to widen. In terms of energy storage, they reiterated that they have deployed a gigawatt hour from their energy business just in the past 5 years, which according to them on the conference call is an incredible accomplishment, already moving the needle for that industry. People said it could never be done. They're guiding to deploy another gigawatt hour of energy over the next 9 to 12 months. So expecting some very, very big growth in their energy and storage division. In terms of outlook, Tesla, I said their Model 3 gross margin going to go to 15% in Q3, 20% in Q4. They're taking Model 3 production to about 6,000 a week still by the end of August. They expect to, improve or narrow the margins from their services and other business as they ramp throughout the year. This is really important because that's been dragging down the gross margins of the business. So more efficient services mean Tesla gets more profitable overall as well. And then the biggest thing here is that they don't need to raise money. They're reiterating profitability in Q3 and Q4. They, go into that deeper later in the conference call. We'll talk about it. And then they also had some more details on the China factory in the shareholder letter. China, by far the biggest EV market in the world. They are expecting initial capacity to be roughly 250,000 units per year, scaling to about 500,000 units. They expect the first vehicles to roll off the line in about 3 years. They expect to break ground on that in just a couple of quarters. On to the moment you've all been waiting for, the conference call. Starts out, Martin Viecha, the head of IR, introduces a ton of people, way more than usual, that our executives are there, so kind of interesting angle there. Then Elon goes into the intro, gives his spiel, says he's incredibly proud of the Tesla team. They achieved the production run rate of 7,000 units per week. They've continued to sustain that run rate, 5,000 Model 3s, 2,000 Model S and X, and expect to be able to, improve it going forward. Model 3, once again, best-selling midsize premium sedan in July. This trend is going to continue, getting incredible feedback on the performance and all-wheel drive versions of the Model 3. Additionally, as they get the Model 3s in the field, this is causing viral growth. You get the car, it's so dope. You take all your friends for rides, tell everybody you got it, and that is leading to increased sales. I love this tidbit that Elon says that customers are the company's primary sales force. I mean, this is why Tesla spends no money on ads. This is why they're going to be significantly more profitable than the standard car businesses in the long run, because they're going to be able to... Yeah, it's all good. I'm just in the middle of a recording. Point being, really fascinating that Tesla is able to spend no money on advertising while every other automaker is spending hundreds of millions. This is a key structural competitive advantage for the company. Their customers are doing the marketing for them. This is because they're investing everything in creating superior products. That is paying off. Additionally, Model 3 test drives are expanding to all stores soon. Almost no one's been able to test drive the car. That's been limiting demand. Additionally, they tested out direct delivery to customers. Elon actually delivered a Model 3 to a customer himself on Sunday and was surprised to find that the guy had never even sat in the car he ordered. He loved it still, and I just think it's so awesome, A, that Tesla's testing out this new delivery mechanism to go direct right to the customer's home, B, that Elon Musk himself, the CEO, on a Sunday, is there delivering cars to customers, testing out the new strategy and philosophy. Like, I love to be invested in this company because of the stuff like that. Like, you just can't make this up. No other auto company is putting in the hustle and care that Elon and Tesla are. Additionally, he mentions that the CapEx going from 5,000 to 10,000 Model 3s a week is just a tiny fraction of the CapEx need to go from 0 to 5,000. This makes me even more confident in the company's profitability. Additionally, Elon reiterated that at 7,000, Model 3s and S and X per week, they can be profitable, and they're going to ramp that steadily to the 10K in the coming quarters. And then he goes on to say that from Q3 onwards, Tesla will be profitable and cash flow positive pretty much every single quarter. So this isn't just showing profitability in Q3 and Q4. This is a key structural inflection in Tesla's business model where they start permanently generating cash flow and profits. So really interesting to hear that. Then he introduces the Autopilot leaders because apparently he's really proud of the work they're doing. A guy named Stuart who starts talking about Autopilot version 9, how they've rebuilt the entire foundation of their neural net over the past 3 years. This was sort of Tesla's announcement coming out of stealth mode with this new chip that they announced. They had Andrej Karpathy, who's the new lead of the Autopilot vision team. He is building out, the backbone of this new neural net. They also had Pete Bannon, who is the chip designer, goes on to talk about this leading hardware 3 chip development and how they're going to have a drop-in replacement computer for the Model 3, S, and X, or the old ones that are on the road today, to allow them to do full self-driving. This is something Elon's mentioned on a ton of different calls. Now the cat's out of the bag. Basically, Tesla's invented their own chip, and they claim comparing it to NVIDIA's chip, which can do 200 frames per second, theirs can do 2,000 frames per second, an order of magnitude better. So they were sort of just taking everybody by surprise, launching this new chip or announcing this new chip to start the call. I'm not an expert coder or neural net person, so I don't really understand Tesla's technological advantage here, but if what they're saying is legit, it looks like they've actually displaced NVIDIA as sort of the leading AI chip. The reason being here is a little backstory. NVIDIA's GPUs were actually not originally invented for AI. They're invented for really doing reiterative tasks to make gaming better for super hardcore gamers. People realized they could be using these for AI, and they sort of got, that way pivoted into the AI use case, and that's how the GPU got its start. So now apparently Tesla has designed some sort of chip from the ground up to do AI, and that is sort of the difference of why there's such a breakthrough there. But don't take my word for it. That was just my understanding of what I heard on the call. Then Elon says, super kick-ass. Thank you guys for doing that. Huge respect and admiration. I just love that Elon is so thankful for the team. I think that's awesome. Tony Sakanagi, the Q&A starts from Bernstein. On gross margins, looks like the Model S and X we're up 500 basis points, whatever. The question's not that important. But then Elon apologizes. He says, look, I'm super sorry for cutting you off last time. That was rude. I had no sleep, but there's no excuse. And so just a really, really candid response from Elon about apologizing, and so I was really feeling good about that. And then in terms of the gross margin question about how they're going to improve Model 3 margins so much in the coming quarter, it's really just boiling down to that when you spool up a production line, there's a tremendous amount of inefficiencies. Now the production line spooled up, those inefficiencies are gone, and that's making the gross margin, improve so much sequentially from Q2 to Q3. Deepak goes on to elaborate that producing positive Model 3 gross margins was incredibly a huge milestone for the company, and they feel really good about the path ahead. And they also have this little tidbit about how low production volume tooling for certain parts can be 10 times more expensive than high volume production tooling. And so I guess there's something going on there where they got to do more low volume things at first, making the gross margins look really bad, sort of artificially. They do mention that half of all customers are choosing the all-wheel drive or dual motor version. That could be because there isn't everything else available yet, but that's really interesting. Robin, the new head of sales, goes on to say that in July, they've had over 60,000 test drives in the US alone. They mentioned the top 3 trade-in cars from January to July that were non-Teslas for people buying the Model 3 were the Prius, the 3 Series, the Honda Accord, the Civic, and the Nissan Leaf, which they say is surprising, not mainstream premium sedans. And this is without even the $35,000 version. We're seeing customers or just consumers in general spend more than they ever have on a car up front for the Tesla. I think this for a couple reasons. A, because they love the car, they love the product, they love the brand, they love the mission, all of that, but also the cost of ownership of an EV is a lot cheaper than you realize because it's so much cheaper to charge at home or supercharge than it is to fill up gas, and that's going to be a huge economic reason making the Model 3 a lot cheaper than it looks on paper versus a lot of these gasoline cars. RBC Capital Markets asked about the China Gigafactory cost and output. Elon, once again apologizing for cutting him off, says about $2 billion in capex needed to get the factory to 250,000 vehicles a year. They're going to be a lot more efficient with capex going forward. When ramping Gigafactory 1, they made a ton of learnings and improvements, and so they're just going to be leveraging those for the Chinese Gigafactory. Consumer Edge wanted to dig into capital spending plans, China Model Y. How do you plan on funding all of this without going back to the capital markets? Also, is there a notice from regulators about raising outside capital? This is something the shorts are going crazy about, like some SEC notice technically would make it so Tesla could never raise, and that's their theory of why Tesla's saying they don't need to raise. Elon said that was BS, and that's not true, so that was off the table. But in terms of funding, everything, basically Elon's answer is even the convertible notes, if they don't convert and we have to pay them off, that are coming up in late 2018 and 2019 are going to be funded with internally generated cash flow. So they're doubling down on this profitable cash flow thing. Then they go to Evercore. He doesn't end up answering a question. Adam Jonas, one of the most interesting guys. I don't know if he's still my favorite Tesla analyst, but he's like, oh, hey everybody, so much love and respect on the call, loving it. Kind of makes a joke. Wasn't that funny? Then for the Autopilot team, asks that a fully autonomous car is sort of like a Terminator and could be weaponized. Is this going to be a risk for selling Teslas in countries like China? Elon's like, well, I've never heard that one before. Okay, so a total miss from Jonas. Then his other question, who do you think would be a more formidable competitor, BMW or Amazon? Elon's confused. He's like, for Tesla? And then he's like, I don't think either of them are likely to be. And so that was Adam Jonas. First of all, Adam Jonas, BMW screw BMW. They're like the worst car maker. I think you could have picked such a better car maker. Waymo, second of all, you don't mention them as a competitor. I don't know. Anyway, Jonas, not the best questions. Romit Shah comes on, asked about the fully autonomous coast-to-coast drive, which a ton of you guys had messaged me about, so I was ready to ask about that if it hadn't been addressed. Elon says we could do the coast-to-coast drive, game it, do a certain route, but that's not really the point. Additionally, the resources of the Autopilot team are all working on the safety of the system. That's more important. And I think there's sort of been a misstep here where they promised they would do this coast-to-coast drive, and so they kind of have to do it now, but in reality, it's just not a smart move, not a smart use of resources. There's way more important shit for the limited Autopilot engineers to be working on, and so they're just prioritizing it correctly. So I'm actually fine with that. The analyst Romit Shah then goes on to talk about, how do you increase the amount of Autopilot like add-ons when people buy their cars, because that's all software, that's huge margin. And so they basically said, yeah, we're working on that, that'd be good. And I think that's interesting to highlight because that's what I love about Tesla is even if they sell their vehicles with the hardware at break even, I think in the long run, they're gonna be able to make so much money from software, from selling the self-driving software package, from selling, an app ecosystem on the center console. Let's say they have an Alexa-like AI voice kind of thing in Tesla cars, and you order food with that. You order stuff online with that. Maybe Tesla gets a cut of all of those transactions, very similar to the way Apple and their iOS App Store gets a cut of everything that happens on that platform. Maybe Tesla gets a cut of everything that happens software-wise from within their vehicles. And so I think that's an interesting angle. I'm gonna make more content on that in the future. B of A. Something about the tent, is it, can we assume that it's permanent? Elon basically goes on to say, necessity is the mother of invention. We had a ton of different learnings from the tent. JB chimes in, we're not limiting our automation and manufacturing with the tent. Our game plan is still to use robots long term, and they just learn from it, and they're not gonna build everything in tents from now on, but they will use them strategically, it sounds like. They also talk about Model 3 gross margins. They do think they can hit 25% gross margins with an around $40,000 ASP. This is key because I believe the ASP for Model 3 will end up being around $55,000 when it's all said and done. And if they're already think they can do 25% on an average selling price of around 40-something thousand, this means we could be looking at 30% gross margins, like what Monroe said, in the long term for Model 3 program. I mean, this is really exciting implications. Apple of the auto world, that whole thesis is really coming through if Tesla hits these gross margin targets. Berenberg, something about, difficulty manufacturing versus difficulty learning about manufacturing, difficulty versus learning about technology. How are they tackling those two things? They said they think of those one and the same. They actually said that in manufacturing, it's really just a software problem. And that is the biggest roadblock to do a manufacturing at scale. And so once again, I believe Tesla's expertise in software, they're the company I'm betting on out of every auto company to use that expertise to really generate a leading advantage and build the car of the future. And I think this is just, one example of that is that even just beyond the car and the software that goes into it there, the software building the factory is a whole nother level of competitive advantage where I think Tesla is really, really strong. Baird, something about July cash flow, wants to see if they're positive. Deepak's like the books of July aren't quite done yet. They also say we need to look at the full quarter. That's when we'll take a step back, analyze the results. But they do want to say they're highly confident in being cash flow positive in Q3 and Q4. Then the Wall Street Journal comes on, an interesting twist to allow press onto the call. They say, do you still plan on making 1 million vehicles per year? Elon says if it's not 1 million, we'll be close. Where's the capacity to do that? Elon sort of jokingly says that there's a place called Shanghai, and then sort of hints that there could be vehicle production at the Gigafactory, which I picked up on, and we'll get to that later. Also, Wall Street Journal asked about Model Y decision, where are they going to build it? Elon says maybe we'll announce this year, maybe next, can't tell you yet. Clean Technica comes in. This is, I think Elon's like one of his favorite Tesla blogs. I think they're an awesome website as well. Asking about the Model Y ordering process. Will that be different? How will the reservations work? Is it going to be a similar, 2-year wait like the Model 3 had? Elon says we're not sure. We're still discussing that. He also mentions in one of the answers here that the biggest constraint on production is body production, will be solved in a week or two, and that whatever he's working on in general is the biggest constraint to Tesla's production. There were a couple more from Clean Technica, but I didn't get all of them down. Then the last question from the quarterly conference call was HyperChange. They let me ask a question. I actually knew about this since yesterday, but they wanted me to be quiet, so I stopped tweeting about everything. So sorry if I stopped replying or tweeting, but I got on the call. I'm super stoked. Huge shout out to Tesla and Martin, the head of IR, for helping me get on the call and giving all of the hyperchangers and all of you retail investors a voice. Huge shout out to Rob, the Tesla Daily Podcast, for talking to me for over an hour to work through my questions. And so, I compiled all the questions that you sent. And some of them were asked already earlier on the call. But my big one, was where are you going to build the Semi and Model Y? Elon had already said he wasn't going to build the Model Y or say where he was going to build that. So then I asked about the Semi and Gigafactory 1 vehicle production. Then Elon kind of laughs and basically says, I can't answer that. But I think the answer is yes. That's where they're going to build the Semi, Gigafactory 1. They've already clued us in that every Gigafactory from now on will include vehicle production. So that just seems like a no-brainer. Then I also asked about the PG&E Energy project, why they're ramping the car business battery packs from 0 gigawatt hours to 20 gigawatt hours to 40 gigawatt hours, but they're only ramping the energy battery packs from 0 to 1 to 2. It just seems like a much slower ramp. Why are they focusing on that? Got a very long answer. The sort of gist was that it's just, they're even training and hiring electricians because there's not enough electricians. Like, there's just growing pains with an industry this big. They mentioned that 1 gigawatt hour of energy was like unprecedented years ago. Now they're doing it every single year. The growth has been incredible. They are incredibly excited about the growth in that division. They wouldn't really elaborate on the G&E project that I mentioned, which there's an electric article about, up to 1.1 gigawatt hours, could be hundreds of millions in revenue. It is worth one of the largest utilities in the entire country in Northern California, PG&E, one of these old school utilities. So I was really excited about that project, but I guess they still can't really talk about it yet. Then I did get a couple more tidbit questions in there. I asked Elon what he would want us to ask, or like if there was anything he wanted to say that shareholders should be focusing on, and he didn't really have an answer. He said they try and coordinate the calls to know what we would want asked already. I don't know. Anyway, that didn't really go as planned. So then I squeezed another question in, which was basically like, look, I'm surprised by the fact that saying that Tesla has to be profitable and cash flow positive, and they will be in perpetuity, because to me, it seems like there's so many things with the business model, Model Y, Semi, batteries, that you're going to need to fund with incremental CapEx that internal cash flow won't cover. So I was wondering, are they sacrificing growth by focusing on this new fiscal engineering strategy of profitability? Elon basically says, no, we're not actually going to be sacrificing any growth, and the company needs to show profitability and cash flow at this stage, and he thinks they can do it, and they'll be able to generate enough cash to fund all those projects. And he also finally, and then towards the end of the answer, he mentioned something that I've talked about here, and I'm learning about more and more, which is that Tesla's biggest constraint is not the amount of access to capital they have. It's not how much money they can spend. There's a ton of different things, like hiring the right employees, just logistics, just building this stuff out takes time. And so as a rule of thumb, growing 100% as a manufacturing company, just seems like sort of like the rational or healthy limit of growth. And Tesla is, by my estimates, on track to basically double revenue to 24 billion this year, and they maybe could do that next year as well, with just a couple billion coming from internal cash flow and Model Y deposits. So when I take a step back and think about it, I actually believe Elon's answer that this focus on profitability and cash flow will not really slow down the company's long-term growth plans. And so I hope that that's right. That sort of wraps up the call. It was a whirlwind. I'm still digesting. I'm sure I'll have a ton more thoughts for you all. I guess my high-level analysis and takeaway from the quarter is that, and this is sort of what I've been saying on the show and on interviews, is that the iPhone moment of the industry has arrived. Tesla's master plan they set out to do 12 years ago, build an affordable mass market EV that would change the paradigm of the transport industry, that was absurd. That was a moonshot that no one believed. Today, in 2018, Tesla, in the current quarter we're in, Q3 2018, is gonna show a profit. In the month of July, the Model 3 outsold every single other premium midsize sedan combined. Not electric cars, just internal combustion engine cars. The industry inflection to electric vehicles, at least here in the US, it's in the books. We're going electric. This was not inevitable 6 years ago. Now it's inevitable. Tesla's the one leading it. They have the top 3 best-selling cars in the country. Model 3 production is gonna ramp like hell the next 2 quarters. I think Tesla's gonna be able to produce hundreds of millions of free cash flow and profit in the back half of this year. This debunks the biggest criticism and short pillar of the company, which is that they're not profitable and they can't make money. I mean, the shorts are running out of arguments here. Look at what the Wall Street Journal just reviewed the performance Model 3 as: a revolutionary step forward in the auto industry. I mean, I'm so excited about this company. I think finally the narrative is going to shift from they can't build the Model 3 to they did build the Model 3. It is as disruptive as we thought it was going to be. And now let's focus on what's coming next. The semi-truck, the Model Y, the pickup, a shitload more batteries, a ton more solar roofs and solar panels. And I think the market is going to start assigning a net present value to the cash flows of those future products. And this is going to drive Tesla stock to new all-time highs. I'm as bullish as I've ever been. So stoked to be a Tesla shareholder. amazingly huge shout out to everyone who emailed in on behalf of HyperChange for Tesla. It worked. Our voices were heard. We'll see what happens with this all next quarter. If you like HyperChange and want to support, huge shout out to all of our Patreon supporters, because that's how we fund this as an independent media startup. So if you're interested in that, check out our Patreon page. Anyway, this is my Tesla earnings wrap up. Would love to know what you all think in the comments below. I'll see you guys next time. Peace.